Join me as I dive into the world of property investing and challenge myself to spot rookie errors that could cost me big money. When it comes to property investing, rookie errors can be the difference between financial success and financial disaster. It's easy to get caught up in the excitement of investing in property, but making mistakes can cost you big time. As a property investor, it's crucial to be aware of these common mistakes and take steps to avoid them. One of the most significant rookie mistakes is not doing your due diligence on the property. This includes not researching the market, not inspecting the property thoroughly, and not reviewing the contracts carefully. I've seen many new investors get caught out by hidden defects or unexpected costs because they didn't take the time to do the research. Another common mistake is over-leveraging yourself by taking on too much debt. It's tempting to borrow as much as possible to get into the market, but this can lead to disaster if the market downturns or interest rates rise. I've seen investors struggle to make repayments and even worse, lose the property because they took on too much debt. New investors often get caught up in the excitement of buying a property and forget to crunch the numbers. This includes not calculating the true costs of ownership, not understanding the cash flow, and not considering all the expenses. This can lead to a property that's not as profitable as you thought, or even worse, one that's losing money. Finally, many rookie investors don't have a clear investment strategy. They might be investing for the wrong reasons or not have a clear plan for their investment. This can lead to confusion, uncertainty, and ultimately costly mistakes. So let's take a closer look at each of these rookie errors. Not doing your due diligence might seem to be an obvious mistake, but it's still surprisingly common. For example, an investor might not research his neighborhood or the neighborhood he's buying the property in, and then end up buying a property in an area with high crime rates or low demand, or there are drug problems, this sort of thing. You just don't want to invest in that area because guests or tenants will not be attracted to that area. Or they might not inspect the property thoroughly and miss hidden defects like dry rot, wet rot, structural issues, foundation issues, even drainage problems, particularly if it's in a floodplain. Over-leveraging yourself is another reason that can have serious consequences. For instance, an investor might take out a large loan to buy a property, then struggle to make the repayments. This can lead to financial stress and even bankruptcy in some cases if you can't get sufficient income from letting or serviced accommodation or HMO, whatever your purpose is. Not crunching the numbers can also be a costly mistake. For example, an investor might buy a property thinking it's going to be a cash cow, but then realise that the rental income doesn't actually cover the mortgage repayments and expenses, or they might not consider the ongoing costs of maintenance, repairs and property management. And finally, not having a clear investment strategy can lead to confusion and uncertainty. For instance, an investor might buy a property thinking it's going to appreciate in value, but then realise that the market has changed and the property is no longer worth as much. Or they might buy a property without thinking about the long-term goals and end up stuck with a property that doesn't meet their needs, and then have the expense of selling the place as if you can find a buyer. I want to share a key insight that really drove this home for me. I was working with a new investor who was determined to buy a property, but they were making all the classic rookie mistakes. They weren't doing all their due diligence, they were over-leveraging themselves, and they weren't crunching the numbers. I had to sit them down and explain the risks and show them how to avoid these costly mistakes. It was a turning point for them, and it really made me realise the importance of being aware of these rookie errors. So thanks to that experience, I was able to guide my investor to avoid a potential financial disaster and instead find a property that was generating a healthy profit. It's moments like these that remind me why it's so important to educate yourself and avoid rookie mistakes in property investing. In summary, avoiding rookie errors is crucial to success in property investing. By being aware of these common mistakes, you can take steps to avoid them and ensure that your investment is a profitable one. Remember, property investing is a game of strategy and patience, and it's worth taking the time to get the right property. If you've made some of these rookie mistakes, or you'd like to share your own experience, had any close calls or successes even, then don't hesitate to comment in the comments below this video. If you want to talk to me about any form of property investing, then you can call me, Alan, on 07539 141257, or from outside the UK, +44 7539 141257. The landline is 0333 224 1257. From outside the UK, it's +44 333 224 1257. You can schedule a call with me at calendly.com/AlanJE, or you can simply drop me an email at alan@alpusgroup.com. Cheers for now.